Welcome to Drill Down Earnings. We have quarterly results out from Cloudflare. This is one of the 50 most important companies in technology. And what an amazing, interesting quarter. Maybe the most interesting comment I've heard from a CEO in at least a year. I'm going to get to that, but first let's look at the earnings. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. This is first quarter results from Cloudflare, better than analysts expected, whatever, better than my models as well. I'm pointing to my model, which is over there. 27% revenue growth on the top line for this company, which is just growing and growing and growing. And even though it throws off losses, which helps their tax bill, they're generating free cash flow. It's a wonderful business model, and they're showing really strong momentum and with some really interesting components to that. So let's dig a little bit deeper. As I mentioned, profitability eludes them as they creep closer to it, negative 11% operating margins, EBIT margins here. But a lot of interesting dynamics within this. One of the things they boasted about at the conference call and in the press release was that they had a record number of customers who are spending between $1 million and $5 million annually, which increased 48% and 54% respectively. So big customers spending big money are increasing, but let's not be confused here. Big customers are only 1% of their business. Customers who spend more than 100 grand. But getting customers, lots of small customers in, which is 99% of their customer count, brings those customers who are going to grow to be big, and the big ones are spending a lot more. So his small customers growing at only 6%, large customers growing at only 5%. I say only because they were putting up double-digit numbers 2 or 3 years ago. But those big customers are getting really interesting. For example, in the quarter, they signed a $130 million 5-year contract with their workers development platform, which marks their biggest contract in company history. And kicked out a major hyperscaler who had been in there. We can only guess who that might have been. Also, their zero trust and SaaS business is doing quite well. They did a 7-year deal, the longest deal they've ever done, at $12.7 million with a big infrastructure provider for zero trust and SaaS systems. So they're getting more and more important in security, not just managing how apps and web apps are distributed. So a nice quarter, nice result. Guidance wasn't fantastic, but it was good. And as a result, the stock was up at 8% in after hours trading and 72% in the last year. So what about AI? There was talk about agentic AI, that is AI agents woven into the Cloudflare product. But there were some really interesting comments about the changing ways people go to the internet. And this isn't just germane to Cloudflare. It matters a lot to companies like Facebook and Google. Why? Well, the internet used to be driven by search. Some would argue maybe it still is, but people go on Google, search for what they're looking for, get a list of links, and start clicking on those links. Now, Google has answered that with help with companies like Yext by providing the answers as soon as you do the search. You don't have to click and go somewhere else. So people have gone from doing lots of clicks to go finding information to fewer clicks to go finding information. But now we have generative AI, where someone goes and does a search and gets the answer. They don't do a lot of clicking after they get the answer. They maybe not do a lot of fact checking after they get the answer, but they don't do a lot of clicking. And I haven't really seen a lot of people cataloging exactly what that means, because if people aren't going through lots of links, Google's not getting paid lots for all those clicks on those links, even when they raise the prices for those clicks. So if people stop clicking, Google stops earning. It's oversimplifying that. But listen to what CEO Matthew Prince had to say. Matt Prince talking about what Cloudflare is seeing about the way people are using the internet and how AI and generative AI is changing that business and changing, maybe emerging a threat to Google.
The internet itself is shifting from what has been a very much a search-driven internet to what is increasingly an AI-driven internet. So if you look at just traffic from Google, 10 years ago, for every 2 pages Google crawled, they sent you 1 visitor. 6 months ago, that was up to 6 to 1. The crawl rate hadn't changed, but what's changed is now 75% of queries to Google answers on Google without sending you back to the original source. But even in those last 6 months, the rate has increased even further, where now it's up to 15 to 1, 15 crawls for every 1 visitor. And if you look at OpenAI, which is 250 to 1, Anthropic, which is 6,000 to 1, it's putting a lot of pressure on the media companies that are there that are making money through either subscriptions or ads on their pages. And I think while we have not historically had media as a big segment, a lot of them are coming to us because they see us as actually being able to help better control how AI companies are taking their information.
So think about that. Cloudflare providing security for other companies, media companies, like, geez, maybe my company or the New York Times or anyone who's creating content, to protect them and protect their data from the AI companies that are trying to access that data. Really interesting times in the internet. Cloudflare right at the heart of that, protecting people who want protection. All right, what's it all mean? What's your big drill down earnings takeaway? Well, here it is. So your drill down earnings short on the essential takeaways from Cloudflare's first quarter earnings. Strong quarter from the company, 27% revenue growth on a year-over-year basis, $479 million in revenues, nice free cash flow generation. Their bigger customers, while it's only 1% of their customer base, spending a lot more. And really interesting comments, which you have to listen to our entire YouTube report about this. Really, really interesting comments from the CEO about how AI and generative AI is shrinking Google's business. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson. If you like what you're watching, or if you don't, maybe you like the next one, follow us on all the socials.